Happy Monday, everybody. I hope everyone had a great weekend. Today is June 10th, 2024, and this is your Monday market update. As we do here every week, I'm going to recap last week's market action, and it was another doozy, and we're going to preview the week ahead. Let's jump right in. Stocks gapped higher on Monday, as I reported on last week's Monday video. AMD and Nvidia both rolled out new chips. Although if you listen to the news, you'd think they're about to line up like they do for iPhones. These chips are not out until 2026. So that news and the complete ignoring of the Wall Street Journal article questioning the hype of AI, we had mega cap tech lead the way at the open again. EcoData poured some cold water on things, and recession worries are back for the moment, and soft landing is back in question. Oil prices were lower and markets approached session lows for a moment. Selling was not to be the winner of the day, and bad news was good news again for the rate cut gang. And they did take expectations from 55% to 65% for September rate cut. I maintain this economy is too strong for a rate cut, and the Fed will hold off until early next year, maybe later this year, but I don't think it's going to be before the election. Just my opinion. For the day, the Dow was down about 1/3 of 1%, S&P was up 1/10 of 1%, the NASDAQ was up 1/2 of 1%. And in case there wasn't enough going on in the economy and geopolitics, Dr. Fauci was in front of Congress. Hunter Biden is the latest big name in court. I'm not going to go into anything political here. I just want to remind you, signal through the noise. I'm going to keep focus on what actually matters. But as one great political movie line goes, the people have a funny way of deciding actually what matters. I'll keep you informed. And for the record books, for a split second on Monday and a market glitch that had shares of Berkshire Hathaway down about 99%. That'll make your heart skip a beat. Not what you want to see when Warren Buffett is 93 years young. And the GameStop saga continues. You really can't make this stuff up. Stocks opened with the slight losses on Tuesday as there was a double take on the EcoData. That shows the U.S. economy is slowing. Even the Atlanta Fed GDP now brought forecasts from 2.7% to 1.8%. The JOLTS number was out again, and that did not do anything to calm anyone. Markets drifted in the red most of the day as rates were up, but near the end of the day, Elon Musk announced that Tesla would spend $3 to $4 billion on NVIDIA chips this year because NVIDIA needed more reasons to go up, and that took the indices up. By the closing bell, the Dow was up 1/3 of 1%. S&P and NASDAQ were both up just under 1/4 of 1%. Elections in the U.S. are still pretty far away, but there are so many big elections going on, and many of them actually may have an impact on us. India and Mexico, both in the news and beyond the scope of this video at this time. U.S. stock futures were higher in the pre-market on Wednesday as the Eurozone tail began to wag the U.S. market dog. EcoData overseas was Goldilocks. And the first cut in the central banks, Bank of Canada and Sweden, were seen as a precursor to the Thursday meeting of the ECB and the idea that in rare form, the European Union may cut rates before the Fed. Stocks gapped higher at the open, and ADP was the ADP job reports was job report number 2 and of the week to disappoint, and all of that worry and the ISM services PMI that was stronger than expected. Good news may be bad news, and bad news may be good news. But what is it that when you have good news and bad news, we just don't know. NVIDIA hit $3 trillion in market cap, only the third stock to do that. And that with the rest of the mega caps tech stocks kept markets higher, and the S&P set the 25th record high of the year, up almost 1.25%. The Dow was up 1/4 of 1%. The NASDAQ was up almost 2%. Fun fact, NVIDIA took 66 trading days to go from $2 trillion in market cap to $3 trillion. It took Microsoft 650 trading days to do the same, and Apple, it took 719 trading days. I can't resist. Stocks were not the only thing going up like a rocket. Boeing's long-awaited and severely over budget and majorly delayed manned Starliner spacecraft. 2 astronauts were on their way to the International Space Station and did not have to hitch a ride with another country. Spoiler, they did make it. Once again, stocks held the momentum and gapped higher at the open on Thursday as market digested the expected rate cut from the ECB. Jobless claims were a bit on the upside, 3 for 3 on the labor stuff, and then you have the U.S. government wanting to review antitrust laws with NVIDIA and Microsoft. Let's see how that goes. As mega cap took a breather, stocks sold back off and did manage to recover as they prepared for the jobs report on Friday morning. The Dow was up about 1/4 of 1%. S&P was as close to flat as you can really be, and the NASDAQ was also down slightly, less than 1/10 of 1%. So in came Friday and the non-farm payrolls, and that everyone was looking for. As I mentioned last week, I didn't think that this would be an earth shaker that people were thinking about, and though it did come in hot, 272,000 new jobs versus an expected 190,000, there was an expected rise in wages news as well, and there was a knee-jerk reaction. But overall, there was not such a reaction. Seems like they were holding out on those major reactions. We'll have to see what will cause one of those. I'll preview 3 things this week that may contribute in just a moment. Stocks did open lower on Friday, but nothing so crazy, orderly, all except for the gamification going on in the markets again with those meme stocks. Be careful there. By the end of the day, markets went out with a whimper. For Friday, the Dow closed down about 0.25%, the S&P down about 0.1%, the NASDAQ was down about 0.25%, not earth-shattering as the missed numbers would have implied. For the week, markets all closed higher. Dow was up 0.25%, S&P up 1.33%, and the NASDAQ was up another 2.33%. As promised, the meat of the video. What is on the docket for this week? 3 items I mentioned before: CPI, PPI, and the Fed meetings. 3 biggies. I have mentioned before that the Fed does not seem to want to surprise markets, so I'll expect no change in rates, but it will be telling when Jerome Powell steps up to the mic at his press conference. Does he change the narrative from last month? Remember, I love some of his lines from last month. Quote, I don't think it's likely that the next move will be a rate hike, close quote. And my favorite quote, I am not seeing the stag or the inflation, close quote. Markets will hang on his every word, and I'll report on that next week. We'll also get CPI and PPI to gauge what is going on with consumer and producer prices, otherwise known as inflation. Please remember, if the reports are that the rate of increase has slowed, please remember that does not make your groceries get cheaper. It just means they're going to go up more slowly. There are a couple other big news items that I'll be watching for. First, today starts the Apple Worldwide Developers Conference, and there is so much news, so much talk about the new iPhone with AI. We'll see what comes out of this, and it will very likely be in the news. We'll also get some small business optimism. Remember, I mentioned that last month. This will matter, and the New York inflation expectations that also made some news last month. One dark horse, I think, is the Treasury announcement on Wednesday. How much more will the Treasury and Janet Yellen bring to the market? Remember, the supply-demand issue that I keep mentioning. If the number is bigger than expected, watch for yields to spike again. We'll get some earnings, and the reason these late entries are watched is that they are AI related, of course. But then again, who isn't AI related these days? And if you're watching to see if Elon Musk gets his $50 billion pay package approved, there is a shareholder meeting for Tesla too. Wrapping up the week, have no fear, Fed heads will start to pop up again. Williams, Goolsbee, and Cook, they're all on the schedule. That's a good list of what was and what will be. So please stay in touch. Let me know when we can meet to discuss your plans and your goals. Only a few weeks left before half the year is actually done. Wow. So for now, stay in touch and have a great week.